Welcome back traders and happy pre-Friday. I'm Christina Barthanidou, market analyst, and at this video I'm going to walk you through my latest technical analysis on EURUSD, gold and Nvidia stock. While the global economy is closely watching trade negotiations between the US and China, which face a deadline on August 12th, but since this is an agreement between the two largest global economies, there's still possibility for an extension beyond that date. Meanwhile, President Trump is also using his import tariff threats to add pressure on the Russian government. India, for example, just received additional 25% import tariffs on its Russian oil purchases. So geopolitics and trade negotiations, particularly those regarding China, will be closely watched. Those could cause some extra volatility, not only in stock markets but also in FX markets, and obviously the euro could react as well, since the currency is sensitive to regional developments in Ukraine. So let's dive into the charts and see what the technical signals suggest. Then looking first at euro dollar, while the pair has been still holding a positive trajectory since the start of the year, but July's trading has caused some cracks. We can see that the price posted a new lower high at 1.1787, followed by a new lower low at 1.1390, violating the positive trajectory. The latest rebound has been encouraging, but looking at the technical scene indicators down here, we can't really confirm a bullish bias. The RSI is still holding below this descending trend line despite rising above 50, while the stochastic oscillator is already within the overbought zone. So that suggests that upside pressures might be limited in the coming sessions, and what we would be waiting to see is whether the price will find enough buyers to pierce through the 1.1695 and 1.1755 territory, rising above this tentative resistance line. Such a move would boost buying confidence, likely driving the price, likely staging a nice rally towards the 1.19 and 1.1980 zone. There are a couple of trend lines here, so that area could attract attention ahead of the 1.21 psychological mark. Now in the event the price fails to rise above 1.1695, we could see a downside reversal, in which case the 1.1550 and 1.5030 territory could come back under examination. Lower than that, there might be another pivot area, the lower boundary of this broad bullish channel at 1.1435, where the 23.6% Fibonacci retracement level of this up leg is placed. So another violation here might further discourage traders, likely causing more selling towards the 1.12 and 1.1217 region, where the 38.2% Fibonacci mark as well as the 200-day moving average are located. Now looking at gold, gold has been quite stable, but it managed to rise above the 3370 number, which has been previously a resistance zone. Of course, the rise was mild. We're still very close to that barrier, and that suggests that negative risks haven't really evaporated, particularly as the stochastic indicator over here is already looking for a negative cross in the overbought zone. So negative risks remain, but obviously the climb above 3370 has attracted attention, and if we hold above this level, we could even retest the 3425 crucial barrier. This coincides with the upper band of this sideways move as well as the upper band of this triangle, so that has a double importance. If we successfully overcome this, the price could gain significant momentum towards the 3500 psychological mark, which we almost touched back in April. Then the 3550 number could also be in focus, because that coincides with the 161.8% Fibonacci extension of the latest downfall. And then the 3600 psychological mark, of course, could be the next number that may attract attention. Now, in the event of a pullback below the 3,355 level, we could see another test between 3,270 and 3,290. That's where the lower band of this sideways move is located. So if we violate this on the downside, that could confirm additional losses towards the 3,200 and 3,230 zone, where the 50% Fibonacci retracement level of this applet is placed. And perhaps a break below the 3,165 zone, which coincides with the 61.8% Fibonacci level, could send stronger bear signal, since such a move would send the price below the previous, would violate this sideways pattern, downgrading both the short and medium-term outlook. And finally, looking at Nvidia stock, Nvidia stock has been trending to the upside as well for a couple of months, and we still have some positive signals here in the very short-term picture. We can see that the price is trying to close above the symmetrical triangle, and the technical indicators down here are still backing the positive action in the price. Both the RSI and the stochastic oscillator are pointing upwards and have yet to reach overbought levels, so that may provide that it could be a sign that there might be more upside pressures in the coming sessions. So if we see clear close above this triangle and beyond 179.50, the rally could stretch towards the 187 188.50 territory, where the upper band of this bullish channel and this longer term resistance line are placed. Beyond that, the next stop could be somewhere between 191.50 and 195. This coincides with the 161.8% Fibonacci extension of the latest downfall, and there is another resistance line passing through this region taken from June. Now, in the opposite case that we'll pull back into this triangle and stay below 179.50, well, the price could retest the 174.40, 176.45 support territory, which includes the 50-period moving average and the lower band of this bullish channel. Violation at this point could dampen market sentiment significantly, likely driving us towards the 165.60, 167.40 pivot point last seen in July, especially if the 170.30 low fails to hold. Then moving lower, the 162.45 could attract attention, since this also coincides with the 50% Fibonacci retracement level of the uptrend that started in June. So that's everything I wanted to share with you guys. I hope you liked this video. If you did, please like it and subscribe in our XM's channel. We'll be back next week for more technical updates. So thank you for watching, and see you next time. Bye bye for now.